crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. The fact that Bitcoin broke out to all-time highs is actually bullish. But the interesting thing is that crypto is still not that widely held. 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. To me, Bitcoin is the ultimate form of trust at the moment, and it is digital gold. If someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its stability.
Bitcoin is the ultimate form of trust in today's collapsing financial system. And that's exactly why it's going to $1 million per coin. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. With inflation eroding savings, debt levels exploding, and fiat credibility evaporating, Lee sees Bitcoin as the digital era's safe haven. As confidence in traditional finance breaks down, he believes Bitcoin will absorb trillions in redirected capital, ultimately pushing it to $1 million per coin. At the same time, he believes another crypto asset is going to massively outperform this year, and that's Ethereum. According to Lee, Ethereum is having its ChatGPT moment. Just like how AI sparked a surge of creativity and new business models, Ethereum is now driving a wave of innovation. Stablecoins are pulling Wall Street into crypto, and much of the adoption is now building around Ethereum. Tokenized treasuries, digital bonds, staking protocols, and real-world asset transactions are already being deployed across the network. With momentum this strong, Lee believes Ethereum's upside could reach 10x or even more. Make sure to stick around until the end of the video as Tom Lee explains why Bitcoin is on track to hit $1 million and why Ethereum could be this year's top-performing crypto asset.
I can give a simple analogy, and then we can think about how it applies to the financial sector. Let's take social media and Facebook. And let's say Facebook was the cash cow for Facebook, which it is for Meta, but then came along Instagram, which was a very different way for people to interact. And then TikTok came along. And if Meta had only invested in Facebook, the company would be a dwindling business. But they, of course, correctly made the pivot both to WhatsApp, Instagram, and then to TikTok, with Reels, etc. Well, in financial terms, the banking industry has not necessarily been that quick to recognize that an increasingly digital world means money is increasingly purely digital, and it's actually breaking barriers, And then if we look at the next iteration, it probably blurs what is the definition of money. We've already seen that blurring with loyalty points, etc. And so banks make a lot of money from traditional financial systems. It's 4% of global GDP is earned by the banking system. And whether you look at interchange, Visa earns 2 to 3% for being in the middle of a merchant transaction. These numbers drop dramatically in a digital world where trust is established through the actual blockchain itself. So that's what we have to realize is what is like the TikTok moment for Facebook. To us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stablecoins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. And now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one. And where there's already a lot of real world assets, tied up and on the layer one. And that's why Ethereum, we think, is going to become extremely relevant over the next decade. This ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley, and this is after everybody had invested decades on SaaS. But guess what? Now there's many, many, many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically. Sean Farrell is the head of digital assets research, and he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum's closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
With staking rewards, deep liquidity, and real-world utility all coming together, Lee believes Ethereum is massively undervalued. And this year, it may finally price that in. Ethereum is quickly becoming the platform of choice for Wall Street, and Tom Lee believes that's why it could reach $10,000 to $15,000 by the end of the year. But while he's extremely bullish on Ethereum, he's not stepping away from Bitcoin. Lee still sees Bitcoin as the foundation of the entire crypto market. With a fixed supply, unstoppable demand, and growing recognition from institutions, he calls it the most important asset in the space. So while Ethereum may be gaining momentum right now, he still believes Bitcoin is the one crypto asset every investor should be watching.
We're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the blockchain, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create units of pricing and to simplify the movement of goods, and simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bitcoin because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network value, and that's what makes it attractive. I generally agree with people who say crypto responds to global liquidity. And so if central banks are easing, then we should see it in crypto prices first. And that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time highs is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. So I think that, Bitwise has a great stat. They say 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum, in percentage terms, has more upside for the next few years. Nobody can really ever correctly predict how Washington, what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington.
After years of vague rules and uncertainty, Washington is finally treating crypto as a serious part of the financial system, with the newly approved Genius Act marking a clear step toward formal support. This definitely changes the dynamic for institutions. Regulatory clarity removes the barriers that kept capital on the sidelines, and for the first time, crypto markets are operating with explicit federal approval. Ethereum is positioned to benefit from this environment. Its network continues to attract activity through stablecoins, tokenized instruments, and financial rails that are now being tested by major firms. But even with that much momentum, Tom Lee reminds us that Bitcoin will always be the foundation. It is the asset that institutions trust first, the one with the fixed supply, the regulatory resilience, and the most recognition at every level. And now that Washington is finally on board, the real question is just how fast the market will follow. How are you positioning yourself for this new phase? Let me know in the comments. Now, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.